Good day to one and all. This is Dr. Sivaraman of iknow-indices.com. Today I'll be presenting the Asian Session Live Market Analysis and the Forecast webinar, explaining the forecast for this particular week, 12th to 16th of September. Today we are on 13th of September, Tuesday. Yesterday, due to technical reason, we are not in a position to provide the webinar. I'm sorry for the same. And now I'm going to explain the expected market moves for the rest of the days and also in the range in which the currencies are expected to swing during this particular week. And also, if you have any questions, you can ask me through that of the question answer window so that I'll be able to answer to your questions which might be relevant to your trading ideas. My contact details are also given here. If you're shy in giving the contact or asking me the questions here, you can send me in the form of an email. I'll reply to that, doctor@i-know-indices.com, or you can contact me through Skype chat ID, iknow-indices@hotmail.com. You also see more information in my website, iknow-indices.com. Now, we are going to see the three components, namely the derived forecast and the market reading, how we note down the initial lows and the highs with the help of the live market code page and try to identify what the players intend to do during the day. But to identify what they intend to do during the week, we need the derived forecast. So that is why I am giving the forecast for the entire week. That too, it is in the form of a session-wise forecast. So in a short time frame, you will be having the information how exactly the market is expected to behave. That will be able to reduce your uncertainty, and also you should be in a position to take appropriate trading decision. Besides, in the event if the trade goes wrong, then we have the trading strategy to limit the risk and maximize the profit. So limiting the risk, we use the hedge order in a platform where they are giving the hedging facility in the same currency. And once a position starts making profit, we use the trailing stop in profit making position. So as a result, we don't take any risk in the market, in the sense we always limit the risk and we don't take unlimited risk. Now coming to the double forecast part of it. It is the second week of the month of September, 12th to 16th. And here you come across an important thing, namely the mid-month trend reversal. So on certain months, the players make the mid-month trend reversals, and such trend reversals happen once in 3 to 4 months, and now they are at the process of making the mid-month trend reversal. So that means very similar to that of the trend reversal moves or the up and down moves what we have seen last week, a similar type of moves will be seen this week also. And also you come across that DOE interest rate decision and FOMC are going to be announced in coming days. So as a result, you'll find the players will try to make wide range swings in the market. So there won't be any continued bullish or continued bearish moves in the market. And then suddenly they will create the bullish feel and rise zero in GBP and offload their buy positions, and later on create the bearish feel and buy at the lowest level after making further drop, induce everybody to technically sell and buy all such sells at the lowest level when they are available in cheap level, and then subsequently they continue to gain the levels. This is how they create the market sentiment and act against it of the traders, and they are expected to make the wide range swings this week also. So most likely in the third week they could make the shift in trading zone from the lower to the higher levels. Now let us see the expected market moves. Yesterday's move we have seen already that They just formed up during Japanese session and started making the slide during the European session. And Euro made more slide when compared to GBP and started gaining the levels in the case of GBP yesterday. And also they made the downward move in the case of USD yen from 102.70 level to 101.42 now, and then started gaining some more. And tomorrow they are expected to make the swing and rise move during the Japanese session, and swing and slide during that of the European session, and swing and come up during that of the US session. Then 15th Thursday, we'll come across the BOE announcing the interest rate decision. And for that, they are expected to make the swing and gain move or rise during that of the Japanese session, and then slide before that of the BOE interest rate decision and start gaining the levels again after that of the decision making. So this is what they are expected to make, and they will continue to swing and rise after that of the BOE interest rate decision during that of the US session also. Then on Friday, they are expected to rise during that of the European Japanese session and make sideways move during that of the European session and continue to rise during that of the US session. And we have seen last week that they made the drop during that of the US session, as I explained to you during that of the Friday forecast, that they are expected to make a sudden drop, and people are wondering why Euro and GBP suddenly made the drop, etc. And now you find some articles also pertaining to that in FX Street, and now they are expected to gain levels on Friday in this week, and so these are all predetermined moves, and if we're trying to find excuses, we may find or we may not find. So that is what I intended to say, and you'll be able to predict the market for n number of days, and provided you know the right approach to the other market. The conventional method will not help, as the players create the market sentiment using the conventional technical analysis and suddenly reverse the market, saying that the fundamentals are important, and then the traders get confused. But if we try to read the intentions of the players and the causal factor for such intentions of the players, if we study, then we will never go wrong. Then coming to that of the levels in which the currencies are expected to swing this week, Euro could come down to 1.1150 level and then start gaining the level. So already they have made that slide slowly, and suddenly they will try to bring down more levels in the case of Euro and gain more in the case of GBP, and that they will do it mainly in order to drop Euro GBP cross. So they will be handling, last week I was telling you that they have been handling the N crosses, and this week again they will try to handle the crosses initially and later on come to the other majors. So during the prime, European crosses are expected to be handled aggressively. So GBP could come down to 1.3225, but they came down yesterday up to 1.3337, started gaining the levels to 1.33 and went up to, they are expected to gain the levels in the case of GBP to 1.3550. And in the case of yen, again, they came down from 102.67 to 101.42. Yesterday they made the drop, and today also they made the drop to start with, started gaining the levels, and they are expected to come down closer to that of 101 again during that of the European session or the early US session and start gaining the level. So during the European session, they are expected to make the slide in the case of Euro and GBP. At that time, they could make downward move in the case of USD yen. As you see that they are showing a nominal positive net change in the case of Euro GBP as well as USD yen, just to pretend as if the yen crosses are going to gain, and suddenly during the European session, they will try to drop Euro GBP and also USD yen and bring down the yen crosses. In that process, they will drop more in the case of euro when compared to GBP. As a result, euro GBP cross will also be handled. So keep in mind that they handle the majors and that influences their respective crosses. Then in the case of CHF, they could come down to 0.97 and start gaining the levels again to 0.99 area. Then in the case of Canadian dollar, they could come down to 1.2850 and they came down to 1.3030 level so far, and they are likely to come down after they formed 1.3124 as a high yesterday. Then in the case of Australian dollar, they set the low around 0.7500 as 0.7494, and they are expected to make a lesser dip now. And when euro and GBP are making a dip, and then subsequently they are expected to gain the level. And in the process, you know that now they are handling Aussie crosses, showing negative net change in the case of Aussie and positive net change in the case of euro and GBP. As a result, euro Aussie and GBP Aussie are expected to show positive net change, and suddenly they will make the drop in them, euro and GBP, and gain the levels in the case of Aussie and simply reverse the cross. So follow it carefully, understand how they are handling the respective currencies, majors and the crosses with the help of the net changes on the live market quote page. So this we need to recognize and act smartly so that you will be able to continuously identify the right type of currency and earn from the rubber market. So studying the live market quote page is an art, and you need to learn it fully. Then you will find it is much easier to follow a single tool of live market quote page, so that tick by tick move you can just watch at ease without much of a constraint. And see, a figurative expression of that is the chart. So in a figurative expressions, you might ignore certain facts, like when they make a quick up and down move near the high as a stop, and the chart study will say it is nothing but a noise, but actually that is how the players make the moves in the market. So you need to understand how the players tactfully handle the positions and also how they are trapping the traders, so that once you know it, you will be able to avoid getting trapped again and again. See, normally what happens when you commit a mistake, we learn out of the mistake, and then subsequently when a situation arises similar to the condition what we experienced, we avoid committing the mistake. And that is a normal human tendency, that is learning out of mistakes. And that also seen in the case of animals, animal behavior. There again, they learn out of the mistakes. But unfortunately, we learn out of the mistakes, several mistakes, and continue to commit the same mistakes without going for a self-reflection. Okay, every time I'm using the technical and fundamental analysis, and I'm not in a position to make a real headway. Why? People don't question it, and they find there is no alternative. And also they think that somebody has to identify a tool, somebody has to develop a tool, somebody has to go in for a new statistical calculations, then let us follow. That is how they develop the mindset. But the inquisitiveness is the most important thing. It is not that the degree which is going to give the inquisitiveness for a person to do a postdoctoral work or something like that. And it is a question of urge to explore. So once you have the real urge to find out what could be the appropriate solution for me to make consistent profit from the other market, there is no qualification needed. You can do the objective study of all the mistakes what you have committed and relate it to the what were the fundamentals and the technicals you followed, how exactly you made, you perceived that as the right trade, and later on it happened to be a wrong trade, and where exactly it has gone wrong. If you study it, then probably you will be able to understand, well, The players create the market sentiment for the technical followers and then later on use the fundamentals to trap them, make an unexpected move. So when you are not aware of such unexpected moves, when you are not prepared for such unexpected moves, then you get trapped. If you are prepared for it, what you will do is you will use the stop to limit the risk. But unfortunately, what happens when you use stops and subsequently when they hit the stops for 3-4 times, then you become demoralized because the equity erodes and your uh, position carrying capacity comes down. In such a situation, immediately you widen the stop. That is a normal instinct of any human. So widen the stop. Once they hit such widened stops, then you find the equity is eroding in a bigger way. Then again and again, you say that, no, I have blown up 2 accounts, I have blown up 3 accounts, I have blown up 4 accounts and things like that. And you simply put the blame on others without understanding that you are not reflected on the mistakes what you have committed. So keep in mind that reflecting on the mistakes will really make you to progress in your trading. Rather than if you try to point your fingers towards others, automatically you fail to realize your mistakes. And there is a question from Grace. Good day, sir. I am expecting oil, gold, and silver to be making downward movement this week. Do I need to look for DAXI as a cross reference? So you may not be able to relate currencies, commodities with it of the stock market, and it might look like a coincidence, but there is no hard and fast rule that they are to be correlated all the time. From time to time, you find people find correlations between currencies and that of the stock, or between stock and that of the commodity, etc. But ultimately, I wish to call them as coincidences. So how can you trust the coincidences and try to take trading decisions? Let me give you the forecast for gold and silver. They are expected to slowly gain the levels from midweek. And in the case of oil, we'll come across some volatile moves during that of the till midweek, and slowly oil will also gain the levels on Thursday and Friday. Then with regard to that of the downward movement in the stock market, I wish to state that stocks are expected to gain the levels from today. If there is any other question, you can ask me. I will answer to those questions. So we'll come across that here on chip, we are expected to make a downward move and then subsequently start gaining the levels. And you find Thursday, after that of the BOE, they are expected to aggressively gain the levels in the case of GBP. Now, let us come to that of the market reading. Okay. What about your view on New Zealand dollar? New Zealand dollar initially come across now when Aussie is showing negative net change. New Zealand dollar is also showing negative net change, but in a lesser quantum. So they intend to gain more New Zealand dollars to start with, and later on they will gain Aussie also in order to handle Aussie New Zealand dollar cross. So New Zealand dollar is denominator there. They will gain that first. So as a result, Aussie New Zealand dollar will come down to start with, and later on you find Aussie will also gain the level. Then Aussie New Zealand dollar will gain the level. That is what expected to happen from now, with regard to the uh, market reading, I noted down the initial lows and the highs by 3:30 GMT, and they are all given here. And we are trying to compare the market now around 5:20 GMT. What has happened from that of 3:30 to 5:20 so far? Now you find euro, in the case of euro, 1.1225 is the low, and GBP 1.1242, sorry, high is 1.1242. They are not breached the low or the high, they are simply holding it. In the case of GBP, 1.3317 is the low, 1.3342 is the high. They are not breached the low or the high. Yen, 101.42 is the low, 101.98 is the high. They just breached the high, went up to 102.05. So in the case of yen, they made an upward push. And similarly, a small upward positive net change is seen in the case of euro. They are pretending as if USD is expected to gain the level, and then they are expected to come down and come closer to that of the low, or breach the low and hit the stocks below if needed, and then start gaining the levels. So you know that they are known for such stop and moves. Then in the case of CHF, 0.9713 is the low, 0.9727 is the high. They are not breached the low or the high. Then in the case of Canadian dollar, 1.3030 is the low, 1.3056 is the high. So they are just not breached the high or the low. And Aussie also, 0.7542 is the low. They just breached the low, came down to 7538 and come above that of 7542. And 7568 is the high, and they are expected to go higher later on when euro and GBP are coming down in order to handle their respective crosses. So you find in the case of Aussie, they made the downward push. In the case of yen, they made the upward push. So both appear to be stopped as they have just reversed it in less than 30 minutes. Now, the recommended trades. So you can keep buy limit order can keep a buy limit order in the case of euro 1.1218 with the exit level of 1.1275 and a sell stop at 1.1176. They are expected to make a brief downward stop, and in the case of euro, yesterday they just made the drop, so they will just make a downward stop before making a rise. So at that time, to try to catch, we'll be able to make a swing trade. As I told you, this week we'll come across the mid-month trend reversal, so we can only do the swing trade. We cannot afford to do the position trade. Then in the case of GBP 1.3277, can keep a buy limit order. When they make a downward push during the European session, you can just buy it, and afterwards they are expected to gain, then you can book profit. And again, if they make an upward push during that of the early part of the European session, you can take a sell and keep the sell hedge order, buy hedge order. So it should be other way about. I wrongly entered. So it should be a buy stop above that of the high, when they make an upward stop and this is a sell stop below that of the buy, what you are going to do it. That way you can do either way swing trades. In the case of yen, when they come down to 101.42 area, they could make a brief downward stop and you can watch and buy around that level and keep the hedge order at 101.11, and then they are expected to gain again and make an upward move above that of 102. At the time you can book profit. Then in the case of Aussie, they came down to 75.38 and I kept the buy limit at 75.35. So when they make a brief downward push, you watch and buy around that 75.40 and then keep 75.80 as the exit order and 74.80 as the hedge order to limit the risk. You should be able to gain profit. So these are all the market timings which I explained during my webinar, the 3 sessions of the day, how the gap time they make the false move, and also early and the late session they handle the majors, mid sessions they handle the crosses. And I'll come back on 16th September, that is Friday, and review the forecast, what I have given it for this week, and let us see how exactly the market has moved in line with that of the forecast or against. Then on 15th Thursday, I will give the spike trade calls before that of the BOE interest rate decision around 10:10 to 10:40 GMT, 30 minutes. I'll explain to you what is expected to happen in the form of a forecast before that of the BOE interest rate decision. Then I will come back by 11:40 and explain to you, taking about 15 minutes, what happened to that of the trades, and also I'll give you the market reading, how exactly the players have just acted smartly against the expectations of the traders from time to time. So if there are any questions, you can ask me, I'll answer those questions. Otherwise, I'll show the forecast again, the expected market moves for this week. So keep in mind that swing and slide is expected to happen during the 3 European sessions, but many times they will just make a slide and then reverse again and go up during the European session. Keep that in mind and trade accordingly. On Thursday also they are expected to make such a rise. And the levels in which the currencies are expected to swing. So if you want to really enter into the market as safe a level, then wait for the lows to be reached and then watch that new low is not being breached for 30 minutes to 2 hours, and then try to take the buy position. You will be able to easily earn money. So be an opportunity trader. Wait for the opportunity to come and enter into the market rather than simply become addicted to trading and continue to take the positions and later on wait for a longer time, testing your patience. So testing your patience is unnecessary provided you understand how the trading has to be done. Because the players, what they do is they make the swings in the market whenever the low volumes are there. When the volume picks up, they try to make some upward and then downward stop. So till such time, we have to avoid taking position. There is no point in taking position during such time, because we will also be holding the position, watching the market unnecessarily. Instead, once they make the spread between the low and the high more than 40%, more than 40 pips in the case of majors, and 75 pips in the case of crosses, if you try to take the position, then you will find that there will be quick moves happening in the market, and that will help you to quickly realize the profit. So this market reading, every day you can make a note of it. Market reading, the levels around 3:30 GMT from the live market put page, and try to make a comparison all the 5 days, you will be able to understand what the players are trying to do in the market, rather than going for any long-term chart study. And many of the occasions, when you're going for a long-term chart study, none of the traders who have taken a position 200 days before or 100 days before are going to participate in the market. When you look into that of the 200-day moving average or 100-day moving average, that is what it is supposed to be. But in those days, when the electronic trading was not available, and also the leverage trade was not available, and that was making sense, because a lot of traders will do it in the form of delivery-based trading and then try to convert it. But now you come across the leverage trade and the electronic trading, wherein the electronic platform, whatever the position you take as a leverage position, like 1:50 or 1:100 position, by giving only one part of the margin to take 100 part of the position, then what happens? You cannot carry forward the positions. So obviously you have to liquidate the positions. So in such a situation, you find only those who have done the currency conversion trade can hold it for 100 to 200 days. All others have to square up the positions as quickly as possible, because the overnight interest, the burden, is a real burden. And you know that when they hold the positions with the overnight interest, then whatever the profit they calculate, the interest might be more than that. So no sensible person will hold the position for a prolonged period, and only few traders, when the position is making loss, continue to hold the position, hoping that they will be able to recover the loss. And ultimately, when the loss becomes unbearable, they close the position. The players know very well all the tricks of the traders. It is all innocent tricks. So the players do quite a big whips or moves during such times, so that if you don't close the position on your own, the platform will apply margin call, and then you find you lose the positions. So basically, the players know the actual positions of the traders. In such a situation, there is no point in assuming that this is how the traders are going to take the positions and then try to trade. Rather than, you have to read the intentions of the players from time to time, rather than studying how other traders are taking the positions. Then you'll find you become a smart trader. Okay, so subsequently N crosses are expected to gain. Yes, N crosses will gain after the downward push. So when they make the downward push, Euro Yen and GBP at that time, probably once they come below that of 113, and in the case of Euro Yen and GBP below that of 133, you can take buy positions. That will be giving you some good or nice profit. But immediately, don't come to the conclusion that you can do the sell and buy trade, because if you do the sell and buy trade, when they don't make the slide immediately, you lose your patience. And then when it comes down, really, you think that, okay, we can maximize the profit, and miss that opportunity, and suddenly they will reverse and go up, and your lower level sell positions will make real loss. So avoid that. Don't speculate in the dropping markets, sell and buy trade. Instead, calmly wait and let them set the low, and then try to take a buy. That will give you an easy profit. Don't complicate your trade. So these are all the recommended trades. You can make a note and find out how the results are. So I take this opportunity to thank FX Street for the facilities provided to present the webinar. And I'll come back on Thursday and give you the pre and post events, namely the BOE interest rate decisions, how exactly the market is expected to behave and what sort of trade we can do. I'll explain it. Then on Friday, I'll come and review the forecast, what I've given it in this week, and find out the reliability of the forecast. So always keep in mind that your logical understanding of the market is going to finally win rather than following any of the analysis. So your equity is known only to you, and your trading time is known only to you. Then based on that, you take an appropriate judgment when I can do the trade and how long I can hold the position, what sort of trading strategy I'm going to use it, and what are the limiting factors in the platform. Watch all those things and avoid committing mistakes. We'll be able to slowly progress. And overnight, no people will be able to become rich. But you have to always keep in mind the hard work will be rewarded. And the hard work should be in the form of mental study as far as Forex market is concerned, not physically doing 100 trades or being an experienced trader for 10 years. That does not give you the profit. You have to really understand and get the grip of the market. It is something like driving a vehicle. So you have to develop the road sense before that. In a similar way, you develop the mindset to understand the intentions of the players. Then you find trading becomes a child's play. Wish you all the best in your trades. See you on Thursday.